to compete with a DEX, to compete with another lending protocol or things like that, you would have to redistribute maximally every dollar in value to users of the platform to maintain your moat.
GM, good morning. Welcome to the Milkroad Show, the daily crypto show we're holding for 3 days now counts as a long-term conviction. I'm your host, Kyle Reedhead, and today we are joined with Alexander Cutler, co-founder of Aerodrome, the main DEX and liquidity hub on Base, and Merlin, Egalite, co-founder of Morpho Labs, a lending protocol on Ethereum, and I think many other chains. Today, we're going to discuss where DeFi is going next, how DeFi will be adopted and used globally, and things you need to understand or look for to capitalize as an investor in the DeFi space. Before we get started, please support our show. If you're on YouTube, please subscribe, hit that like button, and drop a comment below. And for our podcast listeners, a 5-star rating and review would mean the world to us. It really helps us grow and keep bringing you the best possible content. Today's episode is brought to you by Figure Markets. Grow your cash like a bank, no lockups, just real returns. And KGen, the verified distribution protocol, changing the growth game. All right, let's bring Alexander and Merlin on to the show. Gentlemen, how are you doing today?
Good.
Thanks for
Awesome.
the invite.
Absolutely. Well, we're excited to have you on. You guys have been crushing it. Both of you guys have been crushing it. Your teams, the products that you guys have created. Obviously, being on Base, it's also a very hot topic, I guess, and we've seen a lot of growth there. So I'm excited to kind of learn a lot about what you guys are doing. Let's just start with a quick intro. Why don't you guys walk us through just real quick, what is Aerodrome? Real quick, what is Morpho? And if there's any relevant background you want to explain, then you can do that as well. Alex, why don't you start us off?
Yeah, thrilled to be here. So I think the best way to think about Aerodrome is as a meta DEX. So obviously, decentralized exchange infrastructure is just one of the cornerstones of DeFi, and of the on-chain economy. If we're going to have all these tokens, there needs to be ways for people to exchange them. And so from the earliest days, right, we've seen decentralized exchanges pop up. And this is, an exchange like Coinbase, like Schwab, anything. It's a place you go and you can get from one asset to another. A decentralized exchange just does that same function, but built on smart contracts using permissionless liquidity pools and things like that. There's no centralized intermediary needed in order to facilitate these exchanges. And what makes Aerodrome unique is it is a meta DEX. And a meta DEX basically combines all the best primitives of previous DEX models. So the best of Uniswap, the best of Curve, the best of primitives built on top of Curve like Convex, all into a single streamlined design, single economic model designed to provide traders the best execution, liquidity providers the best rewards, and also token holders 100% of the productive value of the DEX itself.
Amazing. Merlin, why don't you give us one next?
Right. So in our vision, there's two building blocks to recreate the whole financial system. So Alexander is representing one, which is like the trading side by the DEX, and there's then the lending side that is the second building block. And with both of them, you can recreate basically almost everything. And so we are building an infrastructure for on-chain loans, so that to give the opportunity to create lending services and product on top of Morpho. So you can see Morpho as like this kind of lending primitive where anyone can create markets, can create product on top, and offer those services to their end customers.
Awesome. Now, let's start this show sort of talking about, DeFi today, and then where I think where we think DeFi is going to go in the future. For those that weren't around last cycle, DeFi really kicked off and had its moment, let's say in 2020 when we had DeFi summer. I don't know if either of you guys, or at least your companies, were around back then. I feel like they weren't back then. Correct me if I'm wrong. No, not Aerodrome. Was Morpho?
No. I was a DJ running around.
Yeah. I figured
summer,
that.
So yeah.
Same.
Yeah. We all were,
yeah. On our side, we started in 2021.
2021. Okay, right. Makes sense. So for those that weren't here, it was a wild time. It was the first time we really saw, what a DEX was, and you could lend and you could get yield and you could do some of these things. It was very clunky, but it was a wild, euphoric time for a little bit there. And then basically since 2021, I would say the metrics of DeFi and more specifically probably the DeFi tokens have been kind of down only. And then over the last year or so, things have really started to see a resurgence here. We've seen the metrics and the use and the adoption of DeFi really start to pick up. The TVL really start to pick up. We've had a lot of innovation and a lot of new apps like your Aerodrome and Morpho that have come along. And even some of the tokens have gotten a lot better because I think the products have become more resilient. They've been battle tested. They're generating a shit ton of revenues, which is really cool. They're doing buybacks, as you mentioned, Alex. And so it sort of feels to me like DeFi, at least in the crypto space, is like the one sector that's maybe crossed the chasm to be like more of a legit industry, I think. I guess the first question is like, do you guys think that we're there yet? Have we crossed that chasm, or do you think there's still a lot to go? And then where do you think we go from here? Like, what's the next phase of DeFi based on where we are today? We'll let Alex, why don't you start us off again?
Yeah. I would say we've definitely crossed the chasm. I think if you look at what DeFi is now from the earliest of days, and you hit on some of this, you've got protocols that have clear, defined product market fit. And I think, two of the most important verticals are the DEX infrastructure and then the lending market. These are protocols that have, uh, tons of users. They generate tons in fees. And they are the essential backbone of the broader on-chain economy. And I think one of the big shifts, which I think you already hit on from those early days, is that now it's not just that that the protocols are being used and that they are resilient, but the tokens themselves have utility, right? And this is a big change because in the early days, tokens were basically launched and used as kind of like insider extraction vehicles, right? And the reason why you saw DeFi tokens down only forever is because, fundamentally they were just used to allocate to insiders to be sold. They didn't have any real claim on protocol revenues. They didn't really have any like on-chain utility. And so I think what you've seen now is that not only are the protocols themselves achieving like product market fit, but the tokens themselves are the mechanism for operating these protocols. They are useful. They do play a role in the economics broadly. But in terms of what comes next, right, we're already starting to see the first signs of this. Coinbase is directly integrating and distributing DeFi on-chain rails, right? And they call it the DeFi mullet. So it's Coinbase in the front as the distribution layer, and then it's DeFi on Base on the back end. And Morpho and Coinbase, we're the pioneers here with the Bitcoin loan product that any Coinbase user, right, can go and borrow against their Bitcoin. It's an amazing product. It's something that Coinbase could have never offered directly, but they can offer via on-chain rails. And the demand for this product is so high that, DeFi, all of us, Morpho, Moonwell, us on the liquidity side, Aerodrome, are struggling to keep up with the demand. And now Coinbase has also added DEX trading. So if you're trading on Coinbase now, you have access to any token that trades on Aerodrome. And Coinbase says that they believe in the next like 5 years or so, 10% of global GDP is going to come on chain. So if you think about the demand for products and services like DEX trading infrastructure, like borrowing against your assets, and basically the full composability of what DeFi unlocks, distributed by Coinbase, and now tapping into 10% of global GDP, order of magnitude larger than where we are now. It's like we are just in the earliest of days.
Merlin, do you have anything you want to add on that?
Yeah, no, I think Alexander summed the situation really well. I think DeFi is basically blockchain PMF, to be honest. I mean, it's the purpose of the first purpose for blockchain, and this is why it is working so well. Because finance is you have to move a lot of value, and you want to have like as the least trust to put into human beings. And blockchain offer that environment that makes trading, lending, borrowing as safe as possible and as efficient as possible. And you can only do that on on-chain, fully on-chain infrastructures such as Aerodrome or Morpho that are globally accessible. So what that means is that you have deep liquidity, so better rates, better trading price than any other thing that you can get off chain. I mean, with the on-chain loan product that Coinbase did on top of Morpho, people can borrow BTC against their USDC at like now it's a bit higher, but it might be like 6-7%. And we had institutional people that have BTC option, I mean, in custody, and that they are borrowing USDC against that. And it's the LTV is maybe 20%. So they can only borrow $20 against $100, and it's as 15%. On Morpho, you can borrow up to 86% at 6%. And they were asking, why can't we get access to that rate? And it's just because they are locked in that TradFi world that is siloed, and that not everybody can see the opportunity, seize it, and deposit capital to lower the rate. While on Morpho, you have many individuals that can access and see that situation, the opportunity, the demand that is coming from Coinbase, and just lend USDC and get the yield. And we have large actors like Spark or Ethena, but we have also like just small individuals that are just putting $100 and earning a lot of yield on top of that. So you have global access of liquidity, and also you don't have to operate the server or the backend. So you offload everything that the infrastructure that any chain or any bank or fintech needs to reproduce internally with their own security team, blah blah blah. They can just delegate everything to the blockchain itself. And maybe the last thing is, because it's relying on immutable code, I mean, you don't have to rely on many layers on the intermediaries that can take a cut on the fee, and that can at any moment just shut down and turn off the API, and I mean, you're not locked in. You can just like integrate, you own the stack from top to bottom, and that gives a lot of creativity and room for innovation for distributors like Coinbase. So yeah, that's just yeah. That's it.
Alex, you mentioned that I think you said Coinbase couldn't even offer the service of like loans against their Bitcoin, but actually they did offer it in a small way. Was it like 2020 or 2021, something like that? But one, it's not super scalable. There's a lot of risk for Coinbase. It's very expensive because of all the things that Merlin just talked about. And so like it was a product, but it wasn't a great product for them. But just integrating into their app into Morpho, well, what a way better product. So much less risk. I mean, basically no risk on them, right? A little bit, but not much at all. It's way, way, way cheaper for Coinbase. So it's a way better product for Coinbase. And then obviously it's also a big win for Morpho to do this as well. I forget what the growth numbers are. Merlin, I don't know if you have them on top of your head, but since you guys have integrated Coinbase, the numbers are completely off the charts as far as I understand.
Numbers goes up. No, I think there's 1.2 billion of collateral, of BTC as collateral, and maybe 800 million of active loans, something like that.
And that's since February
just in 6 months or something like that. So it's a crazy, and thankfully we have Aerodrome for the DEX liquidity in case there's liquidation that should happen. But maybe we can talk about that later. Huh?
Right. Well, this is the beauty of the DeFi Legos. So it's interesting. There's two things that came out of the DeFi summer days, and even maybe before that. Was the DeFi mullet was a common thing that we talked about, but didn't actually exist back then. But we definitely talked about it. And the DeFi Legos, which was like these DeFi companies building on top of each other and integrating with one another. You don't really get this so much in the traditional world. But the DeFi mullet, you guys already kind of talked about what that is. Alex, you explained it, which is basically fintech in the front, DeFi in the back, right? You explained it Coinbase in the front. Okay. So we know which, where you guys care about. But it is true. Coinbase led this. They were the first ones to do it. And they actually did it with Morpho, were the first time that I think this has happened really. Then we saw Aerodrome getting linked in. And so we'll talk about kind of the growth and what that's happened. I know it's very new for you guys, but maybe you have some insights for us. I think like Aave has done this with Kraken. As far as I understood, Morpho, you guys are doing this with crypto.com as well. Is that true? I saw this in
So
our pro community channel. So
we have,
I
yeah,
haven't verified it.
we have crypto.com, Gemini, and who
Okay.
else can I say that is not confidential? Uh, no,
Anyway,
and
a
we
few.
did Bitpanda, and we have a few other centralized exchanges with that we've done this.
So my question to you guys is like obviously it's seen some great growth today so far. Is this the future of DeFi? Like is this where adoption comes from? Is really the DeFi mullet and it is mainly using these apps that already exist today that integrate into DeFi? Like obviously there are people who use DeFi, you know, with a MetaMask wallet or whatever and they go and use it, but it's I feel like that growth is less over the last few years. We're not getting a lot of new people, let's say, into the crypto space. But we are getting more and more that are using it within the apps that they're already in, whether that be Coinbase or Robinhood or crypto.com or whatever. So is that really the future that you guys see? And also, after you answer that, what are those partnerships like? Like I know in your guys' cases, I think Coinbase might be an investor. So that's great. But you know, crypto.com, et cetera, you just kind of see them as a client, or are they like how's that partnership work for you guys? Alex, why don't you start us off?
Yeah. I mean, I think I do really see the DeFi mullet like experience being the primary growth sort of vehicle for DeFi generally. Like there will always be power users, right? There will always be, the people just like the early internet who want to get under the hood. They want to really understand things. They want to go like direct to some of these products, services, chains, get their hands dirty. But for most people, they don't know the protocols that underpin the internet. They don't know all the technology that needs to come together under the hood to make it possible for them to tap to pay, on their phone, for them to stream and watch videos across platforms. They don't need to know any of that. They just know that these are products and services that are better than or enable something for them that wasn't possible prior. And so when we think about the uh, breadth of all the things that the on-chain economy will disrupt, it's literally any industry that is like maintaining some degree of healthy margin on like a product or service or even institution whose entire institution itself, the entire firm, can be distilled down into immutable code, and that margin now is basically a bounty that this on-chain product can provide a service that's faster, that's real time, that is lower fees, that better rewards its users. And like I think a lot about payments, global FX, remittance, all this sort of stuff, and using your bank to move money around is still just a giant pain in the ass sometimes. And that's with me speaking as the benefit of being, an American and having one of the better systems of which to do this. Fees will kill you, the lag time will kill you. It's a terrible experience. You're not earning the greatest yield in many of these high yield savings accounts, things like that. It's all just not that great. So people who can wrap on-chain services that have far less of this value extraction, far less intermediaries. It's faster, it's real time, it's cheaper, it's rewarding you better. They won't even need to know that any of this is on chain. They'll just know that this is the best banking app I've ever used in my life. I'm getting the
Right.
best yield on my dollars in there. I can tap to pay it anywhere I want to tap to pay it. I can send money anywhere in the world and it's instant and real time. And I think that is how the benefits of all of this work we do on chain will translate to consumers. And, the one example I will just give here, because this exists right now, if you are trading between US dollars and euros right now, and you go to the absolute best of TradFi, well, if you even just start at your bank or an ATM, if you're on vacation in Paris as an American, right, it's going to kill you. If you pay right at the
Oh
merchant,
yeah.
it's going to kill you. They're going to take percentages. But let's say you're even super smart, you're using TransferWise or something like that. It's better, but it's still not great. Right now, today on Aerodrome, the rate you get in swapping, dollars to euros or euros to dollars is better than anything TradFi can give you. And these are, billion-dollar banks, billion-dollar companies. They've done the best on the traditional side that they can possibly do, and we're beating them right now. And so then it just becomes a distribution thing. How do we get that rate, in the hands of more people? How do we get it plugged into people's devices so they can tap to pay and access that liquidity? But if it's a better product, this is the web revolution, right? If a better product can be delivered, if you can uh, distill something into code, it's just a matter of time. And I think that will happen in all these verticals that we're building around.
Yeah.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. The best audience to distribute your product to? Your super fans, duh. But what if you haven't found them yet? That's where KGen comes in. They help businesses scale digital distribution at a price that makes sense. KGen's verified distribution protocol identifies the best users for your product and connects you directly to them. Ready to find real meaningful users for your next big product? Join the KGen network today at milkroad.com/KGen, spelled KGEN.
I think I know that there's people listening going, well, if it's all just the DeFi mullet, this isn't the promise of crypto. It's not, decentralized, it's not self-custody and blah, blah, blah. And I feel like I always have to do this like disclaimer of, I think for me, the real purpose of crypto and what crypto offers is the choice, right? Which is if you want to use your Robinhoods or your Coinbase or whatever and not have self-custody, which a lot of people will choose to use that because it's just easier and it's where their money already is, then they have that choice. But if Coinbase ever does anything wrong or Robinhood ever does anything wrong, or you just, you want to go somewhere else, you have the choice to take your money off that and go and use Morpho or Aerodrome directly, right? With self-custody. And that's the key because we never had that previous to crypto. And so it doesn't mean everyone has to go and do self-custody. That's just not how the world's going to work. And so I think people just need to be okay with having the choice. And I agree. I think this is the way that DeFi really gets adopted because honestly, it's kind of hard to use DeFi. Most people don't want to use DeFi the way that it's set up. And that's not a knock on DeFi as it is today. That's just, I don't know. A lot of people don't use a lot of financial instruments, even in the traditional world. So it's just kind of normal. So the easier, the more accessible we can make it through these apps that everyone's already using. Why would we not do that? A question on competition, at least on where this will go. Today, when you think of competition of, I don't know, lending apps, you think of like Morpho and I don't know, Aave, right? Like you think of this like in crypto native companies, or protocols, sorry. But at some point, there's a few ways that competition can come in. One, I think is like, I don't know, banks could launch their own lending protocols or their own dexes. Robinhood is launching a chain. I don't know if they're going to integrate with you guys, if they're going to launch their own. So first question is this something you guys worry about or what do you think is going to happen there? And then the second question on, I guess this is sort of competition, but so you're linking into Coinbase and into crypto.com, et cetera, et cetera. That means they control the users. And when they control the users, they typically control a lot of the costs. And so far, I'm sure nothing has happened, or at least I hope nothing's happened. But at some point, they could come to you and say, hey, we want you to lower your fees. And if you don't, we'll go to, X competitor. Is this something that's already happening, something you guys are thinking about? And like, how do you guys think that this will play out in the future? So there's sort of two questions there on competition. Yeah. Merlin, you can start.
Yeah, maybe the way I would think about that is, do you think that an intranet is competing with the internet? And the way we think about it is you see Morpho as a network that is globally accessible, that is also you can use from Monday to Sunday at every hour. Anyone can access it wherever you are on the globe. And this is something that a bank cannot offer. And you won't have that deep liquidity that you have on Morpho. And at some point, there will be so much liquidity on Morpho that you'll have the best rates if you interact with Morpho. And that's what we call the network effect, etc.
Hmm.
And at this
So
moment,
the
you can.
moat is liquidity, is what you're saying, basically.
Mhm.
Yeah. In
Yeah,
DeFi.
it's a
Yeah.
network. It's yeah. Um, and and then at this moment, of course, you can take a small fee, but that fee should be represent what's the value of that network, and be correlated to what's the switching cost, to go to another network, and so I think the fee should reflect that. It should not be extractive, but it should be sufficient so that we can maintain and continue innovating and improving that network. But
Right.
cutting you as a bank would mean that you don't benefit or you don't provide that best rate, that best price, that best whatever to your end users. So you are less competitive. And in a world where, I mean, banks, fintechs, what they want to is make profit. So they have an incentive to provide the best product. And if you want to provide the best product in finance, it's basically like, do you have the best price? Do you have the best experience? And do you have the best rate? So that's our approach. So I don't think we are competing because we are really focused on the infrastructure, and they have the whole distribution. And this
Mhm.
maybe comes to the second question, but maybe Alexander, you'd like to add something.
Yeah, I mean, I think you nailed it. I do think there has been confusion in the space at times with some successful DeFi protocols, and them deciding where in the stack do they actually want to fit. And I agree entirely that, there are those of us focused on being kind of the essential rails of this on-chain economy. And if you are the essential rails of the on-chain economy, anybody who's distributing, be it Robinhood, be it a major bank, be it Coinbase, is going to need to tap into your rails if they are going to provide the best experience, the best rate to their customers. But there are some in DeFi who said, we want to own the customer, we want to be the front door. We're going to launch a competitive wallet product. We're going to throw fees on our front end because we believe somebody will come to us instead of Robinhood or Coinbase. And I think there's like a bit of hubris in there, and there's a bit of like losing focus on, where the moat is actually created. And the moat is created in being the best rails, in having the most liquidity, in maximally redistributing value to users of the platform versus, extracting it out to a private entity or something like that. And that is where, like, even if you were, say, a Coinbase or a Robinhood, you said, well, should we just build our own DEX rails or a bank or build your own lending protocol? What would be in it for you? And then where would you get your margin that does not make that like custom piece of software less competitive against, protocols like Morpho or Aerodrome that's going to be maximally capturing and redistributing that value to users, right? It
Mm.
is much more useful, I think, for them to be that distribution layer, take some degree of margin or fee off of that, from the distribution, but they aren't going to be able to add fees, to say a DEX trade, if they build their own DEX liquidity infrastructure without making themselves less competitive versus us. So why do it, right? Just tap into the best rails. And by the way, it's also very interesting, I think, because like with something like Aerodrome, it is very, very cool that Coinbase is distributing, every token that is live on Aerodrome. So in a way that they are like directing flows from their 100 million users directly to our liquidity pools. And you could say like, well, hey, aren't they kind of like vampiring their own centralized exchange here? In a sense, maybe, but they are also growing what they can distribute by orders of magnitude. They're dropping the cost of each token that they distribute significantly. They're lowering the regulatory risk. And hey, by the way, they own a large portion of VE Arrow. They vote each week on the platform. And in doing so, they earn a percentage of the total revenue the platform creates. So they actually can increase their margin because they can
Hmm.
take a front end fee from the distribution and also take a percentage of the total fees the platform generates. And so it's actually very advantageous for them and is a way that they could, increase their margin even beyond their centralized listings without them needing to build the infrastructure. Just owning a portion of the decentralized infrastructure is probably much
Right.
better for them.
Interesting. So Coinbase, we'll just use them as the example. They own the token. They integrate you guys into their app, and then they basically generate some revenue or some value because the token generates value. Correct?
Yeah.
That's interesting. And then do they also charge a fee on top of it? So like when a user, I don't know, uses Morpho or uses Aerodrome, I'm assuming they add a little cut or a little fee in their own app. Is that correct?
On DEX trading, yes. I'm
Okay.
not sure what it is, but when Brian's talked about the DEX trading, he said, they're going to charge, roughly similar to what they charge on
Right.
typical retail trades. I'm not sure
Okay.
on the lending side.
Interesting.
No,
So
on the borrow
sorry,
side, they don't
they
take
don't.
a fee.
Okay.
But it grows the demand for CBDC.
Right. Which is
So
one of their
and
products.
USDC. So and they earn like money on USDC. So
Right.
basically,
They have other
it's good
ways.
and it creates a nice flywheel for them.
Yeah, absolutely. But that's interesting. So do you guys think as this kind of DeFi mullet kind of plays out here, and we have more and more apps, more and more financial companies, fintechs, maybe even banks that start to integrate into your guys' protocols, that's going to be the strategy for a lot of them is they're going to actually just buy the token and that's where they're going to generate the revenue from is your protocol sort of buying back its token, or I don't know if you guys give yield or however you do it, there's different ways to do it. And that's like a way that most partners will end up coming in and just kind of buying the token and doing it that way. Is that like a strategy of these partnerships?
I mean, I think it should be
Right.
the way that they do
Interesting.
it, and there's just absolutely no doubt though that Coinbase is on the bleeding edge here. But
Mm-hmm.
it's no different than Coinbase wanting
Right.
to hold a bunch of Bitcoin or ETH on their balance sheet,
Yeah.
knowing that they are essentially distributing and depend on the success of these networks and want to share in the success of them. I think it should be the same for DeFi protocols.
Right.
They don't want to make the networks not decentralized because then what is the advantage of them,
Right.
but they do want to own a share of the decentralized networks that they're distributing to the world, and certainly that's at the chain level, but I think that is also at the liquidity network sort of side of things,
Yeah.
the exchange level, right? It's at the lending level. It's almost similar to how they think about Circle, right? They didn't want to launch
Right.
their own stable coin. They wanted to invest in Circle and distribute it and then share in the upside of that. And I think anyone who's building a DeFi mullet strategy, and I think there will be a lot of DeFi mullets, should think like Coinbase. But I will just say, I think they are so far ahead
Yeah.
in their vision and thinking on this that it might not even be anytime soon we see somebody truly recreate it. I think you'll see a lot of people like kind of do an imitation, but they don't really understand the full stack of the strategy. But
Right.
I think over time, the more success that Coinbase has, the more you start to see this on Coinbase's balance sheet talked about in Coinbase earnings call, the more you'll see like other distribution vehicles, institutions get more deeply serious.
Interesting. One of our researchers at Milkroad, Martin, he writes a lot about DeFi. And I don't think he's released this report yet, but I think I just edited it. So I get to front run everyone else. But it was basically called platformization. And he's talking about that this is the direction that DeFi, at least the winning DeFi protocols are going, which is this kind of happened in the tech world too. So like Google, Amazon, Apple, they used to be just like one thing, like a device or an app. And then they became a platform, right? And then a bunch of others could build on top of them. And that became their moat. If you think of like Apple today, it's the App Store, right? And now they have millions and millions of apps and they charge like, I don't know, whatever it is, 30% or whatever to be on there. And you see it with Amazon, you see it, et cetera. So that was like what made the winning tech platforms. And what Martin's theory is, the same thing's gonna be true with DeFi because liquidity is the moat. And so how do you get more liquidity? Well, instead of just trying to be your own distribution channel, you build and become a platform. And if you become a platform and you have a bunch of different companies all utilizing your liquidity and adding to your liquidity, that's how you become the biggest DeFi protocol. From our conversation, I assume that you guys agree with this. And is that sort of what you guys are building towards?
Yeah, totally. And I think that the vision that we have is, if you really want to build that kind of platform, you have to have like a neutral platform, so where the governance does not have critical choice on how the protocol operates. So the governance, even though you can have like a very decentralized governance, you still have human or even like governance attack vectors that are here. So that's fine for, I don't know, maybe for the treasury or some like financial mechanism, but for the core protocol, we don't think that the governance should be able to update the logic while it's running, because we have seen that in the past. So either they were hacked or just upgrade of the protocol that were basically breaking integration on top, and protocol that were not operating anymore because they were tapping into a protocol where the smart contract interface and the logic had changed. So we think that having an immutable protocol that is governance minimized is critical. That's one thing. Also, the neutrality, credible neutrality, which was something that was coined by, Vitalik, I guess, is super important. Because you want to have that platform that is as global as possible and that does not discriminate anyone anywhere on Earth, so that you can have and bring the whole liquidity into one place. And also we think that minimalism and at least simplicity and on how you conceive protocols, and like I think Alexander, you were talking about focusing on one thing, but focusing on one thing and do it perfectly is the critical piece. And if you nail it, then the platform becomes the best at what it's supposed to do, and then everyone that needs that critical piece will integrate it, because that's basically the way it has been created.
Yeah. So those points make a lot of sense. And when I asked about Coinbase or other banks, if they could be competition, I think those points are why they can't really become competition. If Coinbase launched their own lending platform, no one else is going to use that. No one else is going to put liquidity into that because they control all the governance, right? So like you said, governance minimized, and having no one entity that can control it, credible neutrality, all these things. If a bank just launches a lending protocol, they don't have that. And so they're not going to get the liquidity from everywhere else. So I think that's why this platformization way is what allows you to become the biggest and get the most liquidity. So that makes a lot of sense.
And well, and I'll add one more thing there, because
Sure.
I think this, and I gave a talk at ETHCC, which I'll plug.
Yeah.
But the one additional aspect of it is, if the only moat, if you can boil down the firm, if you can boil down an institution into just immutable, permissionless, neutral code, you can deliver these real-time products like at scale. The only moat you have is maximal value redistribution to users of the platform. And so if you are a Coinbase, if you are somebody else, and you are going to deploy your own infrastructure, there's no additional margin for the business that you can take out of it, because to compete with a DEX, to compete with another lending protocol or things like that, you would have to redistribute maximally every dollar in value to users of the platform to maintain your moat, right? So it's just a very different equation. And by the way, you're investing in engineering and you're spending money on it. So, why go out and build something if you're going to have to redistribute all the value in it? I think the only way it would ever make sense is if there is some primitive that they envision, they see out there as an opportunity that nobody has built, and it seems like nobody will build, and they want to go distribute that. But if they can't give a liquidity provider, well, I should say, like on the DEX, if you cut liquidity providers' rewards anything below 100% of the fees the platform generates, you lose to somebody who gives 100%.
Right.
And by the way, we can also reward in like 1.25, 1.5x. So, where is the margin for anybody, a traditional business, to do that? You have to return all the value within the network to the users. And so I think that's just another
Interesting.
key component.
Interesting. I asked at the beginning of this episode of where you guys think DeFi is going. And I just want to ask some questions in terms of some new, I guess, primitives or new things that are coming to the blockchain that we've never really had. So like previously what DEXs have enabled and what lending we've had on blockchains were all for crypto assets. And the big thing this year, at least talk, and some of it is coming, but in many different forms, is tokenized stocks. And actually, not even just tokenized stocks, but just real world assets in general. Everything is coming on chain. And I think it's quite obvious. You've got the administration in the US who are like, hey, we're going to bring all of our finance on chain eventually. You got the SEC saying that. You've got, Robinhood already launching tokenized stocks. You've got Kraken doing it. Coinbase says it's coming. So stocks are coming on chain. And I'm just curious, is this something you guys are building towards? How do you guys see this playing out? Like, are we just going to start mixing inside of Aerodrome? You're going to be able to trade your Tesla for your ETH and your, Apple for whatever. Do you guys think this is coming? And how far away are we from it coming? And then what are you guys doing to like kind of get ahead of that and be a part of that?
Yeah, no, this is definitely coming. I mean, the long-term vision of DeFi is everything is running on on-chain rails, right? It might take 20 years to have 100%, but maybe 5-10 years to have 80% or something like that. Tokenized stocks and reward asset in general are definitely coming on chain. I think the most important pieces to solve first is about liquidity fragmentation, UX, because you have some restrictions. So some assets will be only restricted to KYC users, but some will be fully permissionless. But then you'll have like hundreds of those assets, even like thousands or millions if you're bullish DeFi, which we are all. and if you have as many pools as those assets, then it can become a nightmare in terms of liquidity fragmentation. And I think this is our job to kind of solve as infrastructure to solve those problems. So for instance, we are working on the V2 of Morpho, which will be an intent-based protocol. So instead of depositing liquidity into one specific market, you just say, oh, I'm willing to lend my USDC against any borrowers that have this basket of collaterals. And this basket of collaterals could be infinite, or could be restricted to just a few ones that you think are the only safe asset that people can borrow against those. Or you can also list some requirements, like I want to deal only with people that have KYC 1, 2, 3. You don't have to commit that liquidity. You just put your offer in the wild, and whoever is matching your requirements, then it's settled on chain, and the liquidity is passed to the borrower.
This is like Cow Protocol, but for lending and borrowing, right?
Yeah, kind of.
Okay, interesting. Cool.
And so this way you solve the liquidity fragmentation, and that on top of this, you can then bring a very nice UX for borrowers and lenders. And that will enable and smooth the onboarding on all those assets on chain. So that's like one way to solve. Of course, there's other component and building blocks that we need to work on, the same way that infrastructure providers on the wallet side are working on ERC 337 or EIP 7702 for account abstraction. Those are the kind of like very deep technical stuff. But once it's solved, then we can recreate a very smooth experience for end users that don't really care about all those technicalities, and they don't want to spend like 5 transactions and do a KYC to be able to just trade one stock on a DEX.
Right.
Yeah. I mean, I totally agree. Like, it's coming. It's obviously coming. I think it's going to move a bit faster than people are expecting. I mean, you're already seeing a great degree of proliferation right now, but nobody has cracked the right way to do it yet. And I will say, for my part, I'm very excited to see what Coinbase does here. I mean, Jesse and Brian have been explicit, and Paul too, right? They've all been very, very explicit that their goal is to get coin on chain and to do it this year. And they will do it in the most compliant way that they can, right? They will go to regulators, they will figure out a way to do this. But my hope is that they write the playbook, because I think all of the existing solutions right now are just are subpar. And you look at volumes on these things, you look at TVL on these things, and they're very, very low. But I think somebody will write a playbook. I hope it's Coinbase, and it will unlock an ability to bring this stuff on chain, tap into the permissionless rails, tap into the global distribution aspect of all of this. And then as soon as the playbook is written, like it's going to move so fast. And so, yeah, I'm very excited to see what they're cooking here. But yeah, I mean, there's no doubt everything's coming on chain. Coinbase talks about being the everything exchange. We're already seeing a giant increase in RWAs deploying to Base right now because they are getting that instant Coinbase distribution. And I think it's only going to accelerate.
Interesting. I think maybe my last question here, one of my last ones anyway, is around having a token. So I'm a founder as well, and I don't have a token, and I don't have public equity, thankfully, either. So life is kind of easy. I can just focus on building my products and my services, and it's all kind of good. When you become a public company, okay, now you have investors, and you have to think about, are you doing the right thing for your investors, et cetera. A token is even different than that. And I'm just curious for you guys, like, how is that different? And what is that like? Because it's not just equity, as you said, it's actually an integral part of the protocol. And so, like, I don't even know what my question is here. I just more want to know what it's like to build a company that also has a token. And how does that like factor into the decisions you make and the things that you guys do? Yeah, any insights you can on this? I just want to understand what that's like building and having a token and how that's kind of different than just having equity like a normal company would.
I think tokens are the single best like organizational technology that we've created in the space. It's a tool for aligning incentives. It's a tool for making these decentralized systems work and work at scale and work in decentralized permissionless ways. Now, the caveat here is that 90% of like the top 50 tokens aren't being used for that.
Right, of course.
As I said, they like 90% of the top 50 have zero value accrual, have almost no like legitimate on-chain immutable utility. Like it's just insider exit vehicles, right? It's kind of gross stuff. But I think that given what tokens can unlock as this coordination tool, as this like deeply functional thing in these systems, I think they are great tools. And I'll just illustrate, this in the context of us, because I think we're pretty unique. And I know Morpho's also done this in a very, very interesting way. But Aerodrome never raised any money. So we're already pretty rare in that way. Aerodrome never sold any tokens. Aerodrome never even allocated to individual contributors like vesting tokens, right? I, as an individual contributor to the protocol, didn't get, like 2% of the supply unlocking over 2 years to give me like some degree of exit. How does this work, right? How do we pay for things? How do we incentivize people? We are just a user of the token like anybody else, right? We have locked VE Arrow. We vote each week on the platform to incentivize pools. We earn back a portion of the fees created as incentives. And so that means from day one, we were able to bootstrap based on actual protocol revenue. It means our incentives are aligned not towards creating some sort of exit event, because we will never have a token to sell. It's all max locked, but is aligned towards ensuring that the DEX is, maximally succeeding, producing as much economic value as possible. And by the way, it makes us an equal stakeholder to anybody else who locks the token. I mean, if you just went on chain, you farmed a bunch of Arrow in the early days and you locked up, you're rewarded and incentivized to contribute to the protocol in the same way that the team is incentivized. If you are Coinbase Ventures, right, and you went on chain and you bought and locked, a few percentages of VE Arrow, you're an equal stakeholder to the team. All of your incentives align in the same way. And so like, I am very, very like just maximally bullish on tokens, but the caveat is I think every token should be maximally useful.
Yeah.
I think it should capture and redistribute maximum value. And if you do that, you unlock things, right? Which is, basically like bootstrapping the second largest DEX on EVM with zero of the traditional ways in which you do it. And that's like the value of DeFi, right? You've got Aerodrome never having raised money, eating away at the market share of a $10 billion VC backed, DEX exchange. And that's DeFi to me. It's not just
Yeah.
taking the old model, replacing equity with token, and then, actually making it even worse because tokens are not equity. It's worse than equity. And if it's just used to like sell tokens and extract from retail, it's worse than the old system.
Right.
It's not even
100%.
better. So maximally useful, maximum value capture. And like, I think if more folks in launching protocols thought about that from the very beginning, built tokens in from the very beginning, made their way of aligning incentives the same as any other token participant, the system would be a lot better. And yeah, I would love to hear Merlin talk about this too, because I think they thought in very, very smart first principle ways about how their token is leveraged as well.
Yeah.
Yeah.
Feel free to add to it,
By the
Merlin,
way,
if you like.
Alexander. Yeah. Alexander, like a lot of respect on what you've done with this is like super impressive, and I think like a lot of project could you just like to take inspiration of what you've done. Yeah. So on Morpho, we've raised money from VCs, of course, but what we've done is you talk about alignment, and we think that this is one of the most important thing with tokens is don't have equity on the sides, because there are many projects where there's equity, there's a token, and what it creates is weird. You have two incentives that are might go in two different directions, and that creates some like a weird situation where you don't know where the money will or which branch will accrue the value, right? On our side, we thought about like, hey, everything should be aligned on like bringing as much liquidity to the network, and the token value is representing that the value of that network.
Mm-hmm.
So so if and if the business model that you want to is taking a fee on that on that network, then you need to concentrate everything, all your effort on bringing on increasing that network, and because the token is a reflection of that value, then everything else is just like useless. So what's your incentive at the token, and what you want to grow is a network effect. And if you align everything on that, and you redistribute the revenue to those that are like making the network valuable, then it creates a very nice flywheel where the more liquidity, the more value accrues to the network, the more value accrues to the token, and which makes all people and stakeholders better off.
Yeah.
Yeah.
Awesome. Thanks. I thought you guys would have great answers for that, and you both did. So thank you for that. That was awesome. We're gonna wrap up here, but I just want to ask one last quick question for you guys. I'm curious what metric you guys look at, or what metric you guys care about. So a lot of people look at, I don't know, Ethereum TVL for DeFi as like a successful metric, and we're close to all-time highs on that right now. So I think that's an exciting thing to see that DeFi is finally making it back to those previous all-time highs of back in 2021. So the question is, where do you guys think this is going? Short, long term, I don't know, whatever predictions you guys have in terms of that. But maybe it's not Ethereum DeFi you care about. Maybe it's, I don't know, your own TVL, or maybe it's, base TVL. Like, I don't know. But what's the metric you guys are excited about, and give us kind of a prediction on where you think things are going in the short, medium, or long term?
In the DEX world, I mean, I think you have to look at a few, right? So I obviously looking at DEX TVL, but
Yeah.
that alone can be just like an inflated, meaningless number. So then you have to complement that with DEX volume. So how is that TVL being used? But then also that isn't quite enough, because you can juice that as well. So then you have to complement in fees, right? How much is that volume actually producing?
Right.
But then fees isn't quite enough, because if you're just redistributing it, paying people to participate. So then you have to look at revenue, right? How much is it are you capitalizing and redistributing sort of throughout the system? So I think it's TVL, volume, fees, and revenue on the DEX side. And that is, of course, relevant to us, but DEX is broadly. but I will like, I'm so bad at predictions. I'm always just like 1 foot in front of the other, like survive tomorrow. My prediction is
Higher.
always just more. Yeah. More is good, right? We just keep doing more forever. But in talking with some of the base team, I mean, they are so wildly bullish
Yeah.
on the potential, right? And it's coming straight from Brian, this prediction of what's coming on chain, and it's coming from their own plans, strategy, partnerships. And somebody at Base has been telling me for so long, he's like, legit chance Base 10x bigger next year, right?
Hmm.
And I do think that those are the types of multiples we can think about. And that would, of course, apply to DEXs, that would
Right.
apply to the chain itself, that would apply to protocols like Morpho as well. But yeah, I think we are going to be entering a phase of absolute insane growth because the protocols have never been this good. The legal and regulatory landscape has never been this good. You've never had as many businesses, institutions, whatever, getting in the game, pushing this distribution. And so, yeah, I mean, this is the moment I think we've all been building for. So I think it's going to get a bit nuts.
Yeah. Great answer. Merlin, anything you want to add there?
Yeah, maybe on the lending side, which is, I mean, we are not looking at TVR because TVR is total is what's deposited. But if you borrow, let's say, like I'll take a dumb example. If you deposit $100 as a lender, and then there's a borrower that borrow those $100, you have zero TVR. So it's not really representative of the. So we have a metric that is total deposit that sum the collateral plus the supply. But that is missing the number of loans, which is on what you actually generate revenue. So we look at total deposit, active loans, and of course, like the fees that are generated through that and that are redistributed to the lenders. So it's little bit different to the DEXs, and TVL does not apply the same way from both protocols. As Alexander, I'm not a great person to estimate figures, but I mean, I would not be surprised if Base instance, I mean, the Morpho instance on Base surpass the Ethereum instance that have like 7 billions already. I would not be surprised that it crosses that within the next year, and I would not be surprised if Morpho is in 2 years have like more than 100 billions of dollars. If we are like, I mean, if we count all the institutions, fintechs, as you said, Alexander, that are coming on chain, they have the tools, there's the infrastructure. We can see a massive growth very, very rapidly. So yeah, we'll see. We have heads down, building and helping them, onboarding them into the DeFi world, and yeah, we just need to build.
Awesome. Well, guys, thanks so much for joining. I know you guys are busy building, and so it's always nice to take some time away and come and chat with us, and so we can learn a little bit more about what's going on. But it was great to have you guys on, and we learned a lot today. So I really appreciate it. Good luck to everything you guys are doing. We're going into a crazy growth mode, I think, as well. And so good luck during that. I know those are wild times as a founder, but again, appreciate everything you guys are doing. And for the listeners, if you're not already using them, you can use it in many ways. You can use it through Coinbase, or you can go directly to Aerodrome or to Morpho and check it out there. Thanks, guys. Really appreciate it. Everyone else listening in, thanks for joining in, and we'll see you guys in the next episode.
Thanks so much.
Thanks, guys. Bye-bye.
If y'all are making swaps or trades right now, highly recommend you check out Milkroad Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. you won't be upset, and you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milkroad Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.